Awesome. So welcome everybody to September's meeting of the Inland SoCal Housing Collective. Today we have three small presentations to do, all regarding policy or propositions that pertain to housing. And so first up, we have Andrew Dawson from California Housing Partners to come and just share a little bit, just a policy update. When we talked at the beginning of this month and I asked him to share out, we didn't know what would the governor will have signed or not have signed at this point in the month. So I just asked Andrew to provide an up to date on what is happening in Sacramento uh, in reference to housing policies or legislation pieces that are being signed. So Andrew, I gave you presenter rights if you need it. If not, go ahead.
Yeah, I don't think I'll need it. So the legislative session ended in the end of August. There are a bunch of housing bills that got onto the governor's desk, which is really exciting. Um, I think I shared last week or maybe 2 weeks ago in a space like this, kind of some of the big ones that were being on the governor's desk. The governor hasn't signed very much legislation related to housing yet. Usually he would sign kind of a lot of the housing bills at the same time, and he just hasn't done it yet. The one big one that he has vetoed is AB 1840. Put a link in the chat for that one. You might have seen a lot of press related to this one from uh, kind of national partners. So the Republican Party talking about California giving money to immigrants and things like that. This bill was a reason for that kind of backlash from the party. So the governor ended up vetoing this bill. In regards to how the program is implemented, this is the California Dream for All program, which gives down payment assistance for first-time homebuyers. In terms of implementation, I don't actually think this changes very much. This bill in and of itself did not change very much policy. It was kind of just more of a lightning rod for kind of broader politics outside of California. But the governor did veto this, and you could read the veto message um, when you follow this link as well. But other than that, there hasn't been any other updates. And on the state side in Sacramento, we're just waiting for the governor to start signing more and more housing bills. He has up until the end of this month to do that, and we expect a number of the bills to get signed. And I'll definitely keep in touch with you all, or at least send Melanie kind of an update as they get signed. Other than that, we are in the calm of the legislative session. So the California Housing Partnership, we sponsor bills all the time. So if you have ideas for bills or things like that, happy to hear you out and see if we can get something rolling there. Rosina?
Hi, Andrew. Thank you. So when you're saying that the governor vetoed the, policy, or what does that mean, that it passed? It didn't pass? What is it really? I'm sorry. I'm a little.
No worries. So it means that the bill was introduced in the legislature and it passed out of the legislature and went to the governor, and the governor has to approve or not approve of the policy. In this case, part of the reason, so the governor vetoed it, meaning that he disapproved the policy, so the policy wasn't enacted. And part of the reason why he did that was probably because of some of the kind of broader politics outside of California that had this bill turn into kind of a lightning rod. But yeah, so this bill was passed by the legislature, but it wasn't signed by the governor, meaning that it's not law now. It is not law.
Okay, thank you.
I had a question, if I could piggyback on that. I'm Melinda with credit.org. I heard you say Dream for All. So was that part of the veto?
So the bill itself related to the Dream for All program. The Dream for All program is still in existence and is still working and is still up and running. This would have made some minor changes to the program. but it was vetoed, so it's not going to make this bill is not going to apply to Dreamfall. Dreamfall is going to continue working the way it has been working.
Thank you.
Is there anything, I know you said 3160 and 3190 hasn't been signed, but is there any inclination, any feelings
Yeah,
up there on
kind
that?
of what we're thinking is a veto on both of those. We're not sure. You know, the governor hasn't done anything on those yet, so we're not entirely sure. This is kind of reading what we're thinking is happening in Sacramento. For those of you who might not know, these are two bills that were kind of married together. So both of them had to be passed and signed by the governor for either one of them to be working. And it led to some complications, things like that, kind of moving forward. And so then our thought is that it's going to be vetoed, but we're not sure until it actually happens. And the governor hasn't done anything there.
Awesome. Well, thank you, Andrew, for kind of giving you an update. I know there wasn't much action in terms of housing for you to go off of, but I really appreciate you coming to the space and kind of being the person I'd lean in on this. So I appreciate that. And if there's anything, the collective, I'll try to stay attuned to what is happening and what's made it across. But ultimately, we have 30th. And at this point, I think it'll probably happen closer to than sooner. And so, but we'll be able to provide in our newsletter, we're hoping to be able to provide an update of what made it through and what passed and what didn't. So,
Perfect.
Yeah, thank you. So if you want to be also a part of our Educate and Advocate for Public Policy, we have this pillar that meets monthly on the first Tuesday of every month. And we just shifted times from to now 11 to 12. It was a little bit earlier in the morning, but just because of a lot of schedules, we moved it back an hour. And Taylor Libelt-Varner from National Court is our chair for that pillar. She's doing a great job of leading our work. And we have many participants here in today's meeting that are also a part of that working group. So if you'd like to join that and to look at the different policies we evaluate through the year and how we support or oppose or track or how we prioritize that, please join those meetings. We'd love more folks to be involved in that too. So next up, we have Doni from Rise Economy. I'll make you a co-presenter so you can share your screen. And he's going to be providing us an update on a CRA research that they have done and what they're basically a concept paper on what they want to propose this coming legislative year, the implications of that, and how that directly correlates with housing and so forth. So, Doni, you should have presenter rights if you need them.
Great, thanks, Melanie. Yeah, go ahead and share my screen. Hey, everyone, it's nice to be here with y'all. Hope everyone's having a wonderful Wednesday. Yeah, Wednesday. Screen. So yes, I'm here to talk to y'all about kind of this interesting, cool policy proposal we have at Rise Economy. So to introduce myself, my name is Doni Tadesse. I use he, him, his pronouns. I am the Southern California organizer for Rise Economy, and I'm based in Los Angeles, although I grew up in Riverside. I always like to mention that my phone number is still 951. So yeah, I love the IE. So here to talk to y'all about the State CRA policy and a little bit about kind of our work. So before I jump into that State CRA proposal, I just kind of want to give folks a bit of a background on the federal CRA and the way that it's worked with our like our work, our organization's work, and then kind of the landscape of affordable housing, home ownership, and community development in California. So just to give folks some background on Rise Economy, we were formerly the California Reinvestment Coalition, and our focus is really on creating a more equitable society where Black, Indigenous, and other people of color have access to resources, opportunities to build generational wealth. And we achieve that through kind of two means. One is by working within the existing systems that we have through banking, through the regulatory system that we have of free investment, and then also by working in some of the newer emerging ways that our economy policy can sort of change systems of capital. So we've been working on things like public banking, supporting the work of community land trusts, and alternative forms of ownership, co-op models. So there's kind of a breadth of things that we work on. Access to financial services, providing folks an alternative to some of the costly financial services, whether that is through banks that charge high account maintenance fees or overdraft fees, or alternative, often predatory services like check cashing, payday lenders, things that overwhelm, I think, as folks know, a lot of our communities, BIPOC and low income communities that are often banking deserts. So I'm here to talk to you about, I guess, like our first pillar, which is our work with banks. So if folks aren't familiar with the Community Reinvestment Act, or the CRA for short, it is one of the sort of last pieces of legislation to come out of the civil rights era. It was enacted to combat the practice of redlining, which was the sort of discriminatory denial of fair access to credit for communities of color throughout the US. This was not only practiced by financial institutions, but it was greenlit by the government. Folks were encouraged to deny loans and the flow of capital and credit to neighborhoods that they deemed unworthy or not credit worthy. Often, almost always, these were communities of color, communities of predominantly immigrants. So this was created to combat that. And it said that banks have this affirmative obligation to help meet community credit needs, including low to moderate income communities. And this is important. It says that if a bank is chartered in a community, they have the obligation to meet all of the needs, not just higher income needs or just the white borrower needs. It's the entire community. And so after this was enacted, there were rules that were set up by the federal banking regulators. So that's the FDIC, OCC, Federal Reserve, to see how to evaluate banks on their ability or their practice of meeting these community credit needs, and provide ratings to banks, like what's called their CRA ratings. And those ratings are important anytime the bank wants to grow. So whenever they want to merge with another bank, open new branches, or really, grow or expand in any meaningful way, the regulators are meant to take into account this performance. And because of this, we have a really interesting position. So whenever banks are merging, we sort of like wedge ourselves in that process of that process of the Bank Merger Act, and then also the CRA. So because they have to take into account how well they've been meeting community credit needs, we can say, hey, these banks are not meeting community credit needs. They need to do more. They need to do more in lending and investments. They need to open new branches in, banking deserts like San Bernardino, or rural communities like Fresno, or in some places like in San Diego, for example, like Logan Heights, that doesn't have like a single brick and mortar bank. And so we negotiate what are called like community benefits agreements, where the bank will sort of spell out exactly how it's going to do that. And then those CBAs, they last for 5 years. And that's a real tangible way that we've been able to get benefits to communities. So this includes things like increased mortgages, small business loans, affordable housing, lending and investments, branches, different kinds of accounts like Bank On, or low cost low cost no fee bank accounts. And one area that might be interesting for folks to think about is that, a lot of affordable housing in California is built through LIHTC, or the low income housing tax credit. And 85% of LIHTC investments stem from banks that are motivated by the CRA. So it is a very impactful tool for us, right? It determines quite a lot in terms of housing and broader economic development in our state. So through the CRA, we've been able to negotiate over $100 billion in these community benefits agreements. So this includes things like dollars for, or commitments for, mortgage lending for LMI and BIPOC home buyers. These are, first-time homeowner programs, down payment assistance programs, and also consideration for, sort of like maybe looser credit standards, or more flexible standards or underwriting guidelines. So more commitments, of course, things like small business lending, community development lending, and then also philanthropic grants, contributions, and certainly many, many more things. So it's been very impactful. And folks, feel free to ask questions or put questions in the chat. I know it's a lot, and I think I'm also going through it pretty fast, so feel free to stop me at any time. So the federal CRA, it's been good in many ways, right? So it is our nation's anti-redlining law. It addresses low to moderate income community needs. And as you've seen, it has a material sort of impact, right? So billions have been reinvested in California, through RCBs alone. Now, there are some things that are not so good about it. One is limited coverage. This reinvestment obligation only extends to banks. Now, that might have worked in 1977 when the financial industry landscape was that banks kind of dominated almost all aspects of it. But in 2024, when independent mortgage companies are doing over 70% of mortgages in the state, when most folks consider their Venmo and Cash App their primary bank account, it's very limited, right? So our understanding of banks and financial institutions has changed significantly, which means there are a lot of institutions that are functioning like banks, that are really doing a lot of the things that banks are doing, who would have been covered in 1977 if they existed back then, but because they didn't, they don't have this obligation. So we are looking at that. Another one is that the federal CRA has a lot of grade inflation. So 96% of banks pass their CRA exams. And I think you can pick anyone off the street and ask them, do you think 96% of banks are doing a good job in our communities? Probably not, right? So there's a lot of grade inflation there. And then also there is no consideration of race in the CRA exams. So they only focus on income, which is, such a disservice to what is considered our nation's anti-redlining law. It's counteracting, racially conscious denial of credit and capital. But it is race neutral in the application of this kind of benefit. So that is a serious concern for us. And then also the federal CRA kind of only focuses on the positive things that banks do. So not necessarily downgrades for things like financing oil and gas companies that are polluting our neighborhoods, or financing bad landlords, slumlords or serial evictors that are displacing our communities and rapidly gentrifying our communities in a way that is increasing displacement. And on the right here is a screen grab from one of our campaigns against a US bank and Union Bank. When they were merging, we were able to win this federal hearing. And so that's when we organize our members to, display the community needs that we have, and also the current concerns we have over the consolidation of these financial institutions. So that's kind of one way the federal CRA has been impactful. And so what is the solution? So we are looking, one, at trying to improve the federal CRA rules. They were, there's a modernization effort that took place recently, and the final rules have been released, and we're waiting sort of to see the impact that it'll have. They're facing litigation from a lot of bank trade groups. But while all of that is sort of working its way out, we're looking at ways in which California can actually lead and really set up an infrastructure in the state to fill the gaps that the federal CRA has. And so we're looking at establishing a state level CRA that would address the gaps that you're seeing here, the limited coverage, the grade inflation, the lack of racially conscious exams. And so our view is that a California State CRA can cover more institutions, so independent mortgage companies, state chartered banks and credit unions, and fintech companies, and require that they have this affirmative obligation to meet the financial services needs of LMI communities and communities of color where they are branches or where substantial business is done. And we can evaluate them in a similar way to the federal CRA, but also include things like downgrades for harm. If they're harming our communities with their lending and investment practices, it should be reflective in their exams. We can create it so that we can highlight the kinds of investments that we want to see in our communities. So affordable housing is a big one, CDFIs, broadband, climate, resilience. We can make it so that investments in those kinds of activities is more impactful to their overall score. That way we can highlight and encourage the kinds of investments that we want. We can make it race conscious to make sure that banks aren't redlining, to make sure that banks are meeting the needs of BIPOC communities in the states. And we can put in measures to make sure that it doesn't become this sort of exam that has a lot of grade inflation, more ratings, more consequences for poor performance, and also bolstering sort of like the enforcement mechanisms. And so this kind of policy would be housed in the DFPI, that's the Department of Financial Protection and Innovation. And they are, the body that licenses and charters like state level financial institutions. So it would make the most sense for it to be housed there. And so the rationale for the state CRA, maybe the one that folks will be really interested in is that there'll be increased capital. So there are all of these institutions that are kind of functioning like banks, but they're not reinvesting back into our community. And so with the state CRA, we have this potential to capture that and reinvest. Our numbers have it that we can generate upwards of $15 billion per year for affordable housing and economic development activities. So that's a lot, that's so much capital that we're sort of leaving on the table, particularly in a state that has such a high need for affordable housing. Don't need to tell this crew. And then also a state that is seemingly in this sort of chronic budget deficit. So we need other sources of capital and revenue to address this crisis. There's a lot of momentum, so other states have similar efforts, and the CFPB has actually released a report summarizing these various state efforts. And so we see that as contributing to the sort of groundswell of momentum for state level CRAs. And then it's also fairness. These institutions are benefiting from public support to sustain their business models without having a reinvestment obligation. So for example, I'll take the independent mortgage companies. They rely on government insured loans, and they have this business model of originating, mortgages and then quickly selling them back to the government sponsored agencies like Fannie and Freddie, Fannie Mae and Freddie Mac. So deeply relying on government subsidies to operate and to make their businesses work, but not having a corresponding reinvestment obligation. And then certainly stability of our financial system. So, in recent years, there have been collapses of state chartered banks that have really destabilized a lot of community development, affordable housing, and certainly faith in kind of our institutions. And so having a state CRA can bolster that stability and then also insulate us from sort of federal political turbulence. That's kind of a fancy way of saying when stuff goes down at the federal level. If Trump is in office and similar to his first administration puts in folks that are perhaps more hostile to things like the CRA or reinvestment. This is something that we dealt with in the first term. We had to really fight and litigate against really terrible CRA modernization rules that would have really gutted the CRA. And so depending on who is, president in the future, not just this cycle, but like in years and years and years to follow, there can be those kinds of like real massive shifts in the way that federal banking regulation or policy is handled. And so having a state level policy kind of insulates us a bit more from that, those changing of hands at the federal level. And so how you can engage, we are collecting stories. So it's really important for us as we're making the case for a state CRA to show examples of how the federal CRA has been impactful. So if you have stories and examples of lending and investments from these banks that you see here, these are banks that we have community benefits agreements with, really helpful for us to know, if they are doing important work in your community, if they've opened a branch in your community, if they are, financing particular projects, supporting things in a way that is beneficial for your communities, let us know. It helps us really make the case that this kind of framework actually delivers impact to our communities. And then we have these committee meetings, like a housing committee and then an economic development committee. These are really great places. Like if you want to keep engaging with this like kind of campaign or our broader sort of banking campaigns, these would be great places for y'all to plug into. And so I'll share my contact information if folks are interested in being part of some of these like advocacy campaigns as we're meeting with banks or as we're developing the state CRA policy. It would be helpful to have your perspective reflected there. So we have these meetings that y'all can plug into. I hate to add another meeting to everyone's calendar, but these are really great ones. And I don't say that just because I hold one of them. So we have a landing page for our CRA campaign. If folks are interested in learning more, that's where you'll find our policy brief. And then if you have any questions, concerns, you can definitely reach out to me. If your organizations are interested in joining our coalition, becoming members, that's also available to you all. So that's it. I'm curious if folks have any questions.
Doni, I have a question. This is Rosina. Thank you for your presentation. I'm with US Bank. I know that you have a committee on economic development, and my question is, for entities that are not financial institutions that say that they are serving the unbanked and underbanked, they are charging terrible fees, very high fees. And in a way, they're taking advantage of this population. I think banks, we're trying to do our best, and we appreciate your advocacy. But how do you deal with those that are not financial institutions that are still really damaging the asset building assets for some of these undocumented or even people that can access banks for now, but are having to pay so much? As an advocacy organization, are you doing anything?
Yeah, thank you so much, Rosina. And that's a great question. You're highlighting a very unfortunate and troubling dynamic that exists, which is folks that are shut out from more traditional financial services are left to deal with these kinds of predatory institutions like payday lenders, check cashers, that there's no shortage of that in BIPOC communities. Like every corner has, as we know, these institutions, and it's siphoning not only, it's siphoning more and more capital money from folks that would otherwise put it towards, their rent, food, for their family, building, their wealth and all of these things. And so it is definitely an issue that that we care about deeply. Our work with, encouraging banks to adopt bank-on products is certainly part of the way of addressing it. We also have this Cal Account campaign that will be we'll have a bill for that next year, which is a fee-free debit account through the state in partnership with other financial institutions. So we're looking at creating some like alternative systems to what exists. And then in our banking sort of agreements, we are talking with banks about increasing their presence in BIPOC communities and low to moderate income communities. Build a branch in that banking desert so that folks have an opportunity to get a bank account with like a traditional bank and not have to rely on these alternative services. So that's kind of where our orientation is. So we're trying to get the banks to do more, create these alternative systems. And then we also support, of course, all of the great advocacy that a lot of the consumer protections coalitions are working on and trying to rein in the power of payday lenders and check cashers and these kinds of predatory institutions.
Yeah, thank you so much. Just very quickly, just a follow-up. We're very grateful that, we're part of the Pencon Coalition, all of us here and many more. But the alternative financing or alternative like the check cashing, they will always have people that will use them because sometimes it's a cultural thing from people that are coming from other countries. Unfortunately, even in other countries, banking is basically available mainly for the more I don't want to say the elite, but the people that can afford it. So it would be nice, if some of those alternative places where they can cash their checks could still do business but be more generous. I mean, it's just that they're really abusive in their practices. Anyway,
Yeah.
Thank you for your comments.
Well, yeah, thank you, Rosina. And I would push back a little bit on that framing because I think if our communities had the kind of access that we're talking about, of like plentiful financial institutions that not only have the products that they need, but then also when folks walk in, they have the language access capacity to deal with folks that might not speak English as a first language, that have the accessibility things for folks with disabilities, and also make them feel welcome and not discriminated against. I think most folks would rather beg for free than have to pay these kind of outrageous prices. So I think that work lies with a lot of us and the banking industry in general to look through that. We did this like secret shopper, mystery shopper project or report a few years ago where we sent folks into banks to ask for these kinds of services. So, and we had folks speak different languages, and what we got back was that, of course, when a person who's white that speaks English goes in and asks for a fee-free debit account, it's very easy for them to get that information, that account. But what we saw overwhelmingly when folks were speaking Spanish, when folks were, Black, Indigenous, or other people of color, they were asked for ID, they were asked to make an appointment, they were otherwise felt unwelcome. So I would say, yeah, so I would just say I would push back a little bit on that and say there's a lot more that's happening than folks just preferring one thing or the other. But really appreciate your comments, Rosina, and thanks for the work that you're doing. I think Ayako I think you're up next.
Great, thank you, Doni. Appreciate your presentation. It's always good to get a refresher on CRA. Can you tell us what your timeline is for getting this approved for the state of California, or how many years away do you think this will be? And then I have a second question.
Gotcha. Yes, and Melanie, please let me know how we're doing on time. I want to be respectful of that. So in terms of the timeline, we are planning to have a bill in the new year, but of course this is we're coming up against very powerful interests with very well-funded trade groups and lobbyists. So likely, yeah, a multi-year campaign. It's unclear like how long that is, because when you look at some of the other states, they've been able to, pass it at much different rates. I think in Massachusetts, it took maybe 5 to 7 years. In Illinois, they were able to actually, like, I kid you not, pass it in 1 week. Yeah, it was their legislature, they had I think it was primarily like their Black caucus, but I think the other like ethnic caucuses also were, in this broader coalition of support. They were able to push it in 1 week. This was, I think, in response to in 2020, the George Floyd protests and the greater recognition for financial institutions needing to do better. So maybe a specific case there, but it really runs the gamut. I think we're definitely looking at a multi-year campaign here.
Okay, thank you. And then very quickly, if not today, maybe another time, can you give us a rundown on the opportunity zones, how that actually has panned out over the last, 7 or so years? I would like to hear your perspective on opportunity zone, if that's something you could do.
Yeah, maybe let's have like maybe a separate conversation. Maybe we can return to it. Is that, yeah, I think that opens up like a huge, not can of worms, but we could talk about it for a really long time.
Is that under your purview or not under your purview?
It's not directly under our purview, but it is something that we look at.
Okay.
Anything that's like funneling capital and into particular communities is going to be of interest to us. Yeah.
Let's pin that.
Thank you.
Let's pin that in our expansion of housing solutions pillar. That conversation. Is that okay, Ayako? For a larger group, if anyone wants to participate in that, would that be okay?
Sure, we can talk about that. Yeah.
Great, thank you, Ayako. And then I think we have just a few minutes. So Ian, do you want to take it away?
Hi there. Sorry, I'm driving, so I'm not on camera, but thank you for this presentation. I'm Ian from Live to Rise. We're in the Coachella Valley, and we're always looking for new sources of revenue for affordable housing. You mentioned that potential for $15 billion annually, I think you said, for your projections. Could you just speak a little bit more as to like how you got to that number, and then any thoughts on, which agency at the state would be, collecting and then administering that for affordable housing and community development?
Yeah, yes, that's a great question. So the way we came to that number is by looking at how much banks are doing in terms of reinvestment already, right? So banks typically do about like 2% of their revenue or their deposits in reinvestment. In our CVAs, they tend to do about 4%. And so we took about like an average of that and then applied that to these institutions. And we actually only applied it to state chartered banks and state chartered credit unions. So the potential is actually that it could be significantly more if you include fintech and independent mortgage companies. It's just that at the moment, that data is much harder to come by, in part because of the lack of like sufficient regulations of those institutions. But let's work with the 15 billion, right? So what that looks like is, in part, that is the banks, these institutions, doing the kind of lending and investments, grant making, providing products themselves. So these state chartered, like the banks and probably the credit unions, will be able to do that to a certain extent. Now you'll maybe think of like fintech, how's Cash App going to do that? How's Venmo? Like they do not have community development in their purview. One way we're looking at it is like those institutions can perhaps instead pay into a fund at the state level. Maybe that's something that's housed within HCD. But then for the other institutions, it would be their own lending and investments that they're doing that are directed or encouraged through the sort of regulatory scheme that we create, right? So it might mean that they're going to do much more affordable housing lending and investments in the Coachella Valley, for example, or they might support more housing preservation. And CLT work, because that's what's reflected in the legislation. But overall, this bill, or this this law would exist within the DFPI, so the Department of Financial Protection and Innovation.
Okay, that makes sense. Thank you very much.
Yeah.
And Doni, I just have a quick question because we're almost at time, but I wanted to clarify for those, who would this, with the state CRA, who would this be most affecting? I know we have the federal CRA, which has implications on the bank. Would this, in terms of a state CRA, this would basically reinforce or tighten the CRA with the bank, and what we'd be adding to that rule is credit unions, fintech, you know, and the mortgage lenders. I just want to clarify that, if you could state that again or clarify that for us.
Yeah. Oh, thank you for catching that. Yes. So the way we're looking at it is like the state CRA is going to be, for the most part, filling in these gaps that exist within the federal CRA. So no one's going to have like a double obligation, if that makes sense. And we can't impose like an overriding obligation to folks that already have a federal CRA obligation. So it would be, you know, these independent mortgage companies, fintech, credit unions, and then state chartered banks would have this state CRA obligation. And I think state chartered banks might have, they also have potentially have like a federal CRA obligation. So, you know, they wouldn't need to do it twice over. I think their lending investment activities can fulfill both. So yeah, it would impact those institutions. And it could work in tandem with the federal CRA, but it wouldn't impact the federal CRA in any way. It's just meant to kind of fill in these holes that exist under its current purview.
Awesome. All right. Well, thank you for coming. If there's any questions folks still have, feel free to put that in the chat and I can send them over to Doni and we can, you know, communicate that way. So we appreciate you coming and sharing today a little bit about this. I think this is something to keep on our radar for sure. And especially look at what I'm interested to is see how other states have done it. And so, and also if there's an opportunity for us to provide feedback or, you know, comments or what our experience has been on as the end user, you know, as like developers or housers, let us know. You know, this is the housing collective space where we have, you know, diverse members and play different roles in housing that could provide some real, you know, boots on the ground experience and feedback. So thank you, Doni, again. So to kind of close out the presenter piece, I'm going to share a little bit about mostly about Prop 5 and a little bit about Prop 33. So if you aren't a part or if you haven't heard updates from the expansion of housing solutions pillar, in this pillar over the course of the year, we've evaluated different policies, about 6, I believe, that we provided a prioritization or recommendation if we want to support, oppose, or just track. And so at this point in the year, we're just waiting to see if those are signed or not. But in addition to that, we've also followed different propositions throughout the year that we saw coming as a way that we could provide either some support, we see it benefiting, or maybe we don't support it, we oppose it, or something that we think that everyone should know about and track. And so we have 2 of those today with Prop 5. Just give me 1 second and I'll share my screen. Let's see. There we go. So I wanted just to share a little bit about Proposition 5 and where the collective has played a role in educating folks about this. This will be on the ballot in November. And so, you know, why Prop 5? What is Prop 5? As we all know, our state is facing an increasingly serious challenge. So California is only producing 12% of the 120,000 affordable homes that we need to create each year to meet demand. And so our critical infrastructure, like our roads, bridges, waters, and systems, is aging, it's unsafe. We all know this, and we lack the energy and fire response needed to protect our families and communities, as we've recently seen, and we currently see in our community right now. So Prop 5 will empower local voters to approve bonds for affordable housing. It's for affordable housing, for also critical public infrastructure and emergency response in our communities, with a 55% vote majority. So if those bonds have strict accountability and oversight. So that's a piece of this, that there's accountability and oversight attached to this process, to Prop 5. So Prop 5, what it also does, it helps communities create more housing that is affordable for low and middle income Californians. So Prop 5 gives, our communities more tools for housing and more affordable housing, including building new housing, including affordable housing for sale or ownership, rental for low and middle income Californians, for different populations, our seniors, our veterans. What it'll do is it'll help building supportive housing for families with disabilities and experiencing homelessness, providing first-time homebuyer programs. It can also help in repairing and renovating existing affordable owner-occupied and rental housing. What it also does is it helps develop the infrastructure, as we talked about, as I just mentioned, needed to support new housing and safe communities. Just like in housing, Prop 5 will give communities more power for infrastructure. So vital safety repairs and improvements for our road, bridges, and public transportation, clean water systems, and critical public infrastructure. Also, our emergency response and preparedness, including fire stations, engines, ambulance, or early warning systems for natural disasters. There we go. And so Prop 5 is supported by these folks here. There's also a lot of, hundreds of other organizations representing seniors or veterans or working families, small businesses, and housing folks that are in support of it. So if you want more information, you can visit Yes on Prop 5, and you can get more information there if you wait just a second. So you could also join the coalition. Here's a QR. We just talked about CRA. QR code that you can use to access the website to just get more information. And if it's something that you personally or your organization wants to help educate around, you can do so here and access this information. Sorry. There we go. So this is just a short summary of Prop 5 and the benefits it could have for affordable housing and our infrastructure, two things that deeply affect the work that we do. Additionally, I'm going to just talk a little bit, and then in our after this meeting, I'll be sending out, in a newsletter, I'll be sending out at the end of this week fact sheets on Prop 33, in addition to Prop 5 that we just reviewed. But Prop 33 is a Justice for Renters Act, and the collective has decided to not take a position on this because it affects different groups of our housing folks, our housing members, in different ways. So what Justice for Renters will do, in summary, is provide for local municipalities, so no longer a state level rent cap, but a rent cap be applied at a local level, so either by a city or county that can approve that and put rent caps in those areas. And as we see the rising rent and how it affects the people, our housers, our housing service providers that work with us day in and day out, they see how, and we all see that, we even experience it, is how the housing rent prices increase and displace a lot of people. Additionally, with this can also simultaneously affect how developers that come into different cities and build affordable housing, because the price in which affordable housing and the methodology used to basically back yourselves into building affordable housing is deeply affected by the rent costs and rent and a rent cap can augment that. There also is a strong tie to how putting rent caps at a local level can also disincentivize affordable development and the production of housing in local cities too. So this is why the group has decided to not take a position, but we want to make sure that our members understand and track this, and so they can make a decision for themselves and arm their communities and staff and so forth with that. So at the end of this month, next week, we'll be sending, on Friday, my days mixed up, there will be a newsletter that will go out. We'll have links to just the fact sheets for all this. So you all have access to this information and can disseminate it as you wish. So let's see here. Next up, which I didn't put on the agenda that we put out, that I put out this yesterday or this morning. But I wanted to spend time and kind of pivot towards providing updates for our pillars, but also providing a little more space for our expansion of housing solutions pillar and our chair Ayako Utsumi. In our last meeting, we talked about a concept paper on transitional rent or transitional subsidies for rent coming out, and there's public comment that is being that can be provided up until the 20th. And so Ayako is going to spend a little bit of time talking about that.
Oh, thank you, Melanie. I just put in the chat, Ayako Utsumi here with the Expansion of Housing Solutions pillar, as Melanie said. In our last pillar meeting, we spent some time kind of going over it. And, these details are maybe a little esoteric for perhaps the majority of our audience here. But for those of you who are networked to organizations that are providing rental assistance subsidies, so organizations providing rental assistance subsidies who either are now already or hope to use Medi-Cal's CalAIM, health insurance dollars to help pay for rent going forward. So the state is asking for public comment on how this program should be organized. And so the link is in the chat here. So again, if you know of organizations that offer rental assistance or aspire to offer rental assistance using Medi-Cal health insurance, CalAIM dollars for very vulnerable people, so that's people who meet certain medical criteria, behavioral health criteria, are homelessness, and they're transitioning from vulnerable places. Kind of these three buckets. You have to have all of this together, and then you could possibly qualify for up to 6 months of paid transitional rent paid by the health insurance company, Medi-Cal. So I think my main concern here is that there are only a few sources of permanent rent, and if we are really helping the most vulnerable, that is medical diagnosis, behavioral diagnosis, homeless, and transitioning from a vulnerable place like incarceration or a hospital or nursing care, that type of thing, is this group really in a position, say in 6 months, to then restart working and then be able to pay rent on their own? Or is this population, will they qualify for a voucher, Section 8 voucher at the end of the 6 months? We know there just aren't enough Section 8 vouchers to go around. There are some, but perhaps not enough for the need. And we know in some areas like San Bernardino County, Section 8 vouchers are quite limited. Or these patients qualify for the ongoing behavioral health permanent rental assistance. So these are kind of limited buckets. Again, you can recover in 6 months, get your own job and pay for your own rent. You can qualify for a Section 8 voucher. You can qualify for the behavioral health permanent supportive housing rental assistance, or there are some if you're lucky enough to have some kind of private source of assistance for rental assistance. There are a few out there, but again, not that many. What will happen if we house people for 6 months, but don't have follow-up at month 7? How do we avoid an eviction cliff? We heard from the city of Riverside. Michelle Davis shared that the city would be offering an additional, was it 6 months of rent on top of what could be the CalAIM transitional rent? So that could be up to a year of rent. But who has thoughts around the potential for the eviction cliff at month 7, 8, etc.? If we don't, as a community, come up with these permanent sources for those patients who really will not be able to pay rent on their own. Kind of your thoughts. And I wanted to thank Don Smith. He spent a good hour with me on the phone. We went over a few details together. So thank you to Don Smith. But wanted to open up to your thoughts on how do we as a community, if we do end up housing people, how do we avoid a month 7 eviction cliff? Okay, it's very silent. So my thought is that for those organizations that are offering rental assistance using CalAIM, the Medi-Cal health insurance dollars, that we just be very careful, select very carefully those who qualify for this rental assistance, because yes, we may house them for 6 months, but facing eviction at month 7, it's very expensive. Lawyers need to get involved. The housing owner ends up not getting paid. The resident ends up getting evicted and having an eviction on their record. It's just not good for anyone. So any thoughts around that? Yes, Jay.
Yeah, I echo it. Makes me think of a conversation I had a few months back with Sean Smith, who is heading an organization that is working with the city of Victorville in their transitional housing program there, the Simba Center. And he indicated in the conversation that he was able to use some federal health related dollars for funding of some of that program. And I didn't get into the details of exactly which dollars and which program they were, but if someone wanted to reach out to him, he has found some things that he felt like other people may not have been aware of. And he's also looking to replicate and manage other transitional housing programs in the Inland Empire out here. He feels like they're a nonprofit organization, has the capacity to run maybe 6 or 7 or 8 different programs in various cities around the region. So there's some possibility there. But he did ask me what happens when they're ready to leave transitional housing, especially in the high desert. What is the next step and where can they go? And I don't know that we have yet a good answer for him on that.
Yeah, that's right. Thank you, Jay. Appreciate that. And yes, we should figure out how to Sean Smith in Victorville. Great. Let's find out what he has. Thank you for that, Jay. Appreciate it. Yes, Don Smith.
Just to clarify, what Simba Center has is the CalAIM housing trio that they're using to help transition people, but they don't have any funding to do permanent housing. In fact, that is the big #1 challenge, as they right now, less than half of the people are exiting that facility to permanent housing because of the lack of permanent housing resources. So that's what Sean's dealing with, as all of us are. And I've been asking that question for 2 years as this has been in the works. What happens at month 7? And until we start to focus on the permanent solutions, transitional is great. We'll use it. It'll help some people. It'll hurt other people in the end. But if we're not focused on the permanent solution, how we create space where people with limited income, particularly benefits income, can afford to rent. And I'm not talking about subsidize. We're never going to government subsidize our way out of the housing crisis. We need housing that people can naturally afford with limited income.
Well spoken, Don. Thank you very much. We're all struggling with the cost of construction for those who are in development. We cannot rent or sell for what it costs us. Even market rate, that's why market rate developers are all building kind of more on the luxury end or high end of housing because it is so expensive. So how can we get the cost of construction down? That's another systems issue that, we hope at ISCHC that we can, in SoCal Housing Collective, we can begin to address. But boy, it's such at a higher level that is definitely a discussion that we need to continue to have. Thanks for that, Don. Okay, yes, back to you, Jay.
Yeah, I think another thing to keep an eye on is the project that Costco is planning and soon will build over in the east part of LA County. I forget which city it is, but they're planning about 600 to 800 units of fairly naturally affordable housing. They're all modular, and they'll put them into several floors above the Costco store, have parking available for them, all on the same footprint. And so I think it's a pretty creative thing.
They did their grand opening today.
Today was
it's in the Crenshaw area. 800 units, 100 and something will be designated as affordable housing. The rest will be workforce housing.
Yeah.
I don't know all the details, but they did a big opening today. I don't know the financing details and all that, but I'm certainly going to take a look at that.
Oh, thank you for sharing, Jay and Don. That's super exciting. So smart. Build it right above a Costco. Have access to some
And you
jobs.
have to be a member. You have to be a Costco member to live
Oh,
there.
you have to be a member. Oh, okay. All right. Darn it. All right.
Or employee. Well, I guess employee probably members too.
Okay. Thank you, John. Thank you, Jay. That's a great one. Yeah, that's definitely worth taking a look at. Love that. That's good to know. Anyone else, any comments or concerns? Again, how do we, Bobby Garrity said made possible by AB 2011. So that was the commercial to residential zoning act, correct?
That's right. Yep.
Okay. Excellent. Wow, that's fantastic. I love that, on the private side, getting involved this way, because as Don said, the government can't subsidize everything that we need. It's just not possible. So how do we be more creative? And that sounds like an excellent example. And so since the Inland Empire is warehouse central, how could we, can we work with the big box stores to say, you've got this great land, but you've got all this airspace above your 2-story, 3-story building? That's a great idea. Inland Empire, can we have a conversation with our warehousers? That's very interesting. Yeah, so I will take it upon myself to do a little research. How's that? And come back to the group. Thank you for sharing, Don and Jay. That's excellent. Yeah, that could be that could be very exciting. So if there are no comments about the 7 months of transitional rent, the public comments are due by this coming Friday. So again, if you know of organizations that are providing rental assistance, please take a look at it to see how might the state better design the 6 months of transitional rent. Again, we just have concerns about the cliff. If you don't have this permanent source already lined up, basically at the point where you get this assistance, which what happens at month 7, are we creating a worse problem that we had to begin with? Maybe. So something for us to consider. Thank you for that discussion, everyone. If you have any further comments, please do reach out to Melanie or me. I'll put my email in the chat, and I'm happy to forward your comments. If you prefer to do that directly yourself in the link through that paper, please do so. Or if you would like to send your comments through me, I'd be happy to do that as well. Thank you. Thank you, Mel.
All right. Okay, well, if there's, I'm trying to look who's on and see, this is a space for just general updates. And so I wanted to provide Jay, who leads out our Bank on Coalition and Wealth Building preservation pillar. If, if there's any updates, we just had the meeting this week and last, in the next 2 to 3 minutes. And so then we can open it up to others who just have general updates too to share out with the collective. Jay, is there any updates you'd like to provide? Any tidbits from in the next couple minutes?
Yeah, we had an exciting meeting this week. A small group, but a very engaged and powerful group of people met together, and we're still exploring what is the best time to meet. We explored at 10 a.m. and that meant some people were not able to participate, so I'll be asking them specifically what we want to do to move on that. But we are continuing to push out the survey for the DPA program, down payment assistance. We want to create a matrix. It's not specifically tied to our wealth building or our bank on programs, but it is very closely related to those. And so Melanie and I and Ayako has had a lot of input on this as well, have put this together so that various organizations that have a down payment assistance program can fill out this form and let us create a consolidated reference point, a yellow pages, so to speak, if you want to go back in history of various down payment assistance programs. That some will be for first-time buyers, some will be for firefighters and teachers, some will be for military, veterans, a variety of different things, but many of them can be combined, so we'll want to look at that. And then we're also getting ready to launch in the next few weeks our Train the Trainer system for really beginning to roll out the Bank On program in the region. We've had over 200,000 Bank On accounts opened naturally without a lot of effort on our part, which is great, but there's still about 1 million people who are using payday loans, check cashing services around the corner, a whole variety of high cost, high fee services that can cause them a couple of effects. It can cost them about $40,000 in lifetime expenses. And these are our lowest income, most at-risk, vulnerable parts of our population. But it can also prevent them from participating in the highest return aspects of the freedoms that we have to own property and participate in the free enterprise system. And so it prevents many of these people from owning property, from starting a business, from all of those things. And an estimate recently out of northern New Mexico, a bank on coalition out there, showed easily 360,000 in lifetime wealth that is not accessed by people who continue to use non-traditional financial tools, whether it's an app or it's a store around the corner. It still prevents them from generating the history. Many of the programs out there require a 6-month stack of bank statements. If you don't have a bank account, you don't even have 1 month of bank statements, let alone 6 months. And so these kinds of things are very, very important. And so we're starting with the banks and credit unions and beginning to roll out the training for all of the different managers and trainers and other parts of the organization that are involved in training the frontline staff. We have 450 plus branches in our region. I can't possibly train every single teller and manager and person at those locations, but we are dividing and conquering so that people can do that. And then after that, all of our nonprofit organizations and our government service providers who directly interact with likely populations, we will be training them on how best to connect their clients with a local credit union or bank that has an affordable, safe account for them to open. So we've got a lot of tools that we have already prepared and a few more that are just in the finishing stages. And so we're looking forward to that. So please contact me and let me know when you're ready to get going, because we're about to take off here.
Awesome. I see that Ian has a question. Ian?
Oh, yeah, Ian.
I was actually going to give an update, a partner update, if there was time.
Yes. No, that's great. Thank
So
you. Right on time.
I'll let others, if others have questions for Jay, go first.
Well, we'll be
All right.
sending
Well,
the DPA link. Oh, sorry. We'll be sending the DPA survey link out to a broader group of folks. So if you know of anyone in the IE that has local down payment assistance programs, send it over to them or send them their contact information over to us, and we'll reach out to them and see if we could get information on their program product. So, all right, Ian, go ahead. Start us off.
Thank you. So I just wanted to let folks know that on November 13th, so it's still a couple months out, but on November 13th, Live to Rise is going to be hosting a developer roundtable at our offices in Palm Desert. And the focus of the roundtable is alternatives to LIHTC for developing affordable housing, for financing affordable housing. So we're going to be bringing in a group of folks who have experience working on different types of deals in California that have basically completely avoided low-income housing tax credits altogether. Obviously, we're in a state budget deficit that's going to continue likely for a couple of years. We know that state tax credits every year have been renewed at a level of about $500 million, and there's legislation to make that a little bit more lengthy in the works right now, but again, it's not really guaranteed. It's very subject to the state budget. And so we're looking for alternatives that could not completely replace LIHTC on all deals, but at least make some more affordable housing deals more viable outside of the LIHTC framework. So we're looking at things like different kinds of bond deals and also things that leverage financing available via HUD and USDA are some examples. So we invite affordable housing developers and those who are interested in affordable housing finance to join us. I think it's going to be pretty useful information for developers. And again, the folks that were going to be sort of leading the roundtable have experience with actual deals that have been successful and come to fruition. And we're working to make sure that it's relevant to projects in the works in the Inland Empire and Coachella Valley. So I'll share more details with Melanie as we work out the logistics, but I just wanted to flag that here because I know there's probably some interest among this group. Thanks very much.
Thank you, Ian. That's super exciting. So yeah, just give me the information and I'll send it out in our newsletters for folks to access. So
Will there be virtual access to that event?
Great question.
So it's going to be in person. Generally, we've had mixed results with hybrid situations. It's a little difficult. We're still building out the agenda. So if it ends up being a thing where it's less interactive, I think we can make a virtual option, but that's still TBD. So we'll get back to you with more details on that.
Thank you.
All right, any more updates? If not, I'm going to jump in real quick and provide one. The Inland SoCal Housing Collective, Uplift, San Bernardino, and Parkview Legacy Foundation will be collaborating to put on a presentation on the Vienna housing model. We put out some information. It's next week on Tuesday, and it will be at ThinkWise Credit Union. So if you would like to join us there, it's in person. It's in person only. So if there is an opportunity for you to come and join, if you want to hear about it, let me know. I did send out the link and the information to register in our newsletter. I will be sending it out again. And so if you have any questions, please feel free. You can just reach out to me and I can get you connected if you want to attend.
Melanie, there are several ThinkWises in San Bernardino. Could you give an address, please?
Yeah, there's an address in the registration. And so I don't know offhand. I'd have to look on my calendar real quick.
Do we have a link for the
Yeah,
registration?
let me drop the link in the registration right now.
Great.
It's also in the newsletter, but give me 1 second and I'll drop it in.
Oh, great. Thank you.
If anyone has any more updates to provide, go ahead and just unmute yourselves and jump.
Yeah, I'm showing 599 East Street or North East Street in San Bernardino. Community room 590 community room. So 599 North East Street.
Melanie, if I may, I just want to introduce myself briefly to everyone. My name is Ryan Sears. I am I just joined on at Neighborhood Partnership Housing Services, NPHS, and I'm affectionately referred to as the policy guy, but I will be leading our policy and advocacy efforts going forward. So for really anything that kind of touches those areas, feel free to contact me. I will throw my email in the chat. But looking forward to meeting all of you at some point here or there and to working with everyone to advance equitable housing solutions throughout the IE.
Thank you. It's perfect space for that. So welcome, Ryan. I had a chance to connect with Ryan earlier this week, so we're excited for NPHS and their added capacity by having you. So great, and you dropped your information there. Awesome. All right. Well, if there isn't anything else, we could go ahead and close the meeting now, just a few minutes early, but I appreciate all of you guys and all your time, and I look forward to connecting with many of you next month at the meeting or prior in one of our working groups. So take care.
Thank you.
Mm-hmm.